Hi, hello, namaskar. This is your host Sarang, and welcome to One Story at a Time. So, in today's podcast, we have a very special guest. His name is Mehta. He is a day trader, a CFA Level III candidate. He has an MBA in Finance and Strategy, and he's also the Chief Product Officer at havenspire Academy and a mentor to more than 500 traders. And I feel very lucky to have Parang as one of my trading mentors as well. Thank you, Parang, for joining and welcome to the show.
Thank you so much, Sarang, and hello everybody.
Great. So let's just jump into the podcast. So let's rewind a few years back when you were in college. So tell us more about your college life. Were you still interested in finance when you were in college?
So I think I was always interested in finance and stock markets, and not exactly stock markets, but more of business. When I was in my
Hmm.
11th and 12th grade, when I was doing my commerce studies in my school, so I was always sure that I want to do something in the business domain, and I'm really not interested in doing any science or any arts or humanities. So that was like I think that was a clarity in my mind. And as I
Hmm.
studied more, I used to read magazines a lot. So then I used to hear about Mukesh Ambani. Okay, there is someone called Rakesh Jhunjhunwala, and then
Yeah.
you kind of get into like the vibe of how corporate world operates. And then I entered into college. This is where
Right.
my quest for stock market really started. So I made my demat account on my second day of my
Hmm.
college. So because that is
Oh.
where, like, I think because a week back I got my bank account created. So earlier I did not have my personal bank account. So since I had to go to college, and it was like in Delhi, so I was going off away from Jodhpur, which is my hometown. So I had to make a account, and then I was smart enough. My dad made a PAN card for me as well. So I was like, this is the
Okay.
time I want to start my demat account now. So this is where
Hmm.
this is 2014, and I was
Okay.
18, and this is where I started my stock market journey. And I had no one around me who was really interested in the stock markets. I mean, they
Hmm.
were probably interested in making money, but they just thought it's too complicated. And I was like, okay, let me just try to give it a chance. And that's
Right.
how that phase of trial and error in stock market started. And
Hmm.
then it lasted for quite a long time.
You've come a long way after that. Okay, let's talk about your trading career later on. So after college, where did you work? I know that you were working as an investment banker. So tell us more about that.
So, what happened is I was in a 5-year program. So I was doing my MBA
Hmm.
and my BBA together, and there was a reason for
Okay.
that. And the reason is, and if there are a lot of finance students who are listening to me, you have to kind of understand this. So either you do like your bachelor's from a very prestigious institution and then do like a work experience. So what you do is you do a 3 years of bachelor's, then you do a 2 years job experience because 1 year is too little for you to actually learn something. So 1.5 years or
Hmm.
maybe 2 years is the experience that you're looking forward to. Now, the problem is if you're doing your BBA from a very good institution, you're going to get a good job where you can survive for the next 2 years. Because if you do it from like a
Hmm.
not so good institution, you're going to get sales jobs as finance jobs.
Correct.
Okay. You're going to have to sell insurance. You're going to have to sell all of that stuff. Right. So I knew that I was not very good at academics that much, and I'm not going to get into like
Hmm.
Sriram College of Commerce or like the best of the
Right.
commerce colleges.
Yeah.
So it's like I just want to get done with my education ASAP, and then I'll figure out
Hmm.
my things later. I will figure out my passion. I was always confident about myself that I'll still be able to do something. So that is the reason I decided to do a 5-year program together to save those 2 years of work X. Then
Okay.
I do my master's, and then I again work for another 3 years. So if you look at it,
Hmm.
3 years of BBA, 2 years of job experience, then another year to prepare. This is 6 years.
Hmm.
Then 2 years to complete your master. That's 8 years. And then another 2 years for you to get your MBA experience. Like after your MBA, you'll do your job. So it's a
Hmm.
10-year story. I want to cut it short to 5 years. That's the reason I have went for like a 5-year program. So that was the rationale behind it. And since I was in my 5-year program, I was always thinking of getting into investment banking. But then a lot of
Hmm.
things stuck to me. Like I got some reality checks. I thought going
Hmm.
into Goldman Sachs is as easy as going, walking into like a Nike store, right? I thought so. But when I realized that, okay, first of all, you do your bachelor's, right? Before your bachelor's, no one even thinks that you are capable of doing anything, especially in the
Correct.
world of finance, because
Right.
it's practically it's true that you are not going to get a holistic view of the markets. Now, when I say markets, I'm not only talking about the stock markets, I'm talking about the bond
Hmm.
markets, I'm talking about the financial markets, I'm talking about some level of emotional maturity as a person, right? So for the first 3 years, you just have to figure out other domains, of business. Finance is one of them. Business development could be another. International business could be another. So while I was doing all of this, I wanted to work at an investment banking firm. And then I got a response that you are not yet eligible to work.
Eligible.
And this is where CFA comes into picture. And then I was like, okay, what makes you eligible to work in an investment bank? So then there is this gold standard of investment banking, CFA. I was like, okay, let's explore this. And then I figured out that, okay, CFA is like it's like a feather, right, in your crown. And that tells that you know about finance, and the thing stops over there. So I started doing my CFA just because I wanted to get much more deeper into finance, not like any of my other colleagues who just know, okay, what finance is. And this is where the journey and the quest of, being an expert or trying to become, very good at what you do started, because CFA is again, it's a program which requires a lot of determination, commitment, time, all of that. So
Correct.
after doing my CFA, I did my level 1, and then I, interned at a couple of places, and all of them were not the investment banks that you want to hear. But
Right.
I worked with HDFC Securities, and I left it in 5 days. Because I got bored.
Okay.
They were trying to put me into sales, and I was like, okay, bye. And then there was an insurance company. They told me that you're going to work on building insurance products which are equity linked.
Okay.
So basically, you will help, in the equity side of things. And then they were like, sell insurance to your parents. I was like, bye. So these are the 2 internships that I did, 5 days each, and then I left them. And in this time, I was trading, because I figured out that this is not my cup of tea. And then after I completed my CFA, so I did my level 1, I did my level 2, and this is the exact time where I was finishing my MBA. Now, I would like to give one quick advice. So whenever you're doing your MBA 1 and MBA 2, best time to do your CFA 1 and CFA 2, because the curriculum is literally the same. So I never studied for my college. I never ever studied for my college. I used to study for CFA level 1, and college was like a cakewalk for me, because you're studying like A to Z, and then college is like nothing. So that is a smart way to approach this. A lot of people ask me, a lot of youngsters ask me that when should I do level 1 CFA? Do it after your bachelor's, as soon as you get into your MBA. So that saves you a lot of time. So after I did my level 1 and level 2, this is 2020 January, I applied for JP Morgan London office, because I was always interested in trading. In India, neither Goldman, neither JP Morgan, neither Morgan Stanley, no one will do trading for you, or you are not going to get trading jobs. You're going to get back office jobs. That means you need to be an expert in Excel, which I wasn't. You need to be an expert in Excel VBA, which I wasn't. Tableau, data, all of that, and everything was like out of my comfort zone. So I was like, I'll rather apply for JP Morgan trading and equity related jobs. So there were 8 rounds of interview, and I got through 4 of them. The 5th one was with a partner. So with a partner of that particular division. And by the time these 4 rounds happened, it is January, February, March of 2020, COVID hits, and then my interview stops. So in the 5th round, it got halted, and they were like, we are not taking any foreign nationals. And my 5th round never happened. So March of 2020 is when the markets crashed, and I took a good part of it. So I was trading America that time, and I was able to capture like a decent amount of move on the downside. And that gave me like a quick leap in my trading. And that was the period where I actually recovered my 4 years of losses. And then I figured out that what did I do differently this time? And it was just trying to capitalize on an opportunity. And I went with a plan. And the plan was to not make money. The plan was to just enjoy the ride, because this crash was like exciting to me. And as a market participant, a lot of traders are there who are there since like 25 years. So I've been here for like 7 years. I have not seen a crash. So this was like a exciting thing for me. And I was into puts, right? I was into short positions. So I was making money, and that was like a considerable chunk of money, which I had never seen as a student. And then I was like, I don't want to sit in placements. That was the decision I made. That I'm not gonna sell insurance. I'm not gonna sell all of that. However, I have seen a lot of my colleagues do very well at selling insurance, and then they ultimately become like sales chief. And then if you look at their commission, staggered commission, this thing, it's amazing. So if someone is good at sales, it's it's a go ahead. But I was not that person. I was always wanted to go into trading,
Right.
and then I decided I'm not going to do that. This is where I
Okay.
worked for a prop desk. So I did not work for an investment bank, but I worked for a proprietary trading desk in Delhi.
Okay.
And at that point of time, I was trading with $20,000 of my own capital in my American account, which was mine. And
Mm.
when I went there, I thought that I'll upgrade my trading skills, because what happens is when you're trading with a prop firm, you're trading with their money. And when you're trading with
Correct.
their money, they're extra cautious. Like, they're gonna teach you risk
Mm.
management, they're gonna teach you a lot of stuff. And I went there so that I understand how exactly trading works. Because
Right.
uh, in my 5 years, the third year I went to America. And over there
Mm.
I
Oh.
interned with the biggest prop desk in the world, which is SMB Capital. And I
Mm.
had like a 45-day stint over there, and that literally
Okay.
changed the way I used to trade. So I went there in my fourth year, and that is set up by Mark Bellafiore. He's a award-winning author, and Steve Spencer, and both of them are like legendary traders. Like, they can make you
Mm.
uh, from zero to hero in like 90 days. These guys are such
Right.
good trainers. So I never got a chance to get trained from them, but I got a chance to interact
Mm.
with traders on the floor, and that changed my
Right.
mindset. And hence I was like, I want to do this for a long time, like 6 7 months, to improvise on
Mm.
my trading. That is the reason I joined this prop desk. As soon as
Right.
I joined this prop desk, I realized that in India, prop desks are a joke. So these guys are like, give us 2 lakh rupees as a deposit. I was like, okay,
Okay.
I'll give you. I'll give you. And then they were like, then you'll be allowed to trade all of that. And they gave me like a simulator. And then they were like, trade on the
Okay.
simulator. I was like, okay, for how long? They were like, until you become profitable. So I was on the simulator, and
Okay.
then it was very funny. Like, I had my phone on my other hand. I was trading
Mm.
with real money with my account, and I was doing dummy trades on their account, just to follow the system. So I was like, okay,
Right.
I'll do it. Okay, I'll do it. So I did that. I made a few mistakes, and those few mistakes were
Mm.
basically, there are hotkeys, right? So you know I pressed like 2 3 hotkeys, just because it was a demo account. I was like, okay, let's
Yeah.
let's just punch in more orders. And I breached the risk limit once, and one time my
Okay.
position sizing was too much. So I learned
Right.
from those mistakes that
Mm.
with hotkeys you can get wrong. But
Yeah.
this went on for like 45 days. But the problem for me was, I was not learning anything. Every trader on the floor was
Mm.
asking me, how do you trade?
Whoa.
So I was like, I'm at the
Okay.
wrong place. You can't learn. That's my philosophy. You can't learn if no one's better than you, right? And I
Correct.
tried to learn from people, but they were very young. They were inexperienced, and
Mm.
I already had like 6 years of experience until that
Right.
time. So as a trader, you
Yeah.
understand like who is mature and who is immature in terms of trading. So I understood
Correct.
that if I have to teach people how to trade, that's going to be a waste of my time at my prime,
Mm.
right? When I'm out of college,
Mm.
I'm not applied for anything, and I'm like a level two
Correct.
candidate sitting and
Yeah.
trying to trade with like dummy money. That was like a joke for me.
Mm.
So
Yeah.
I told my coach, this is not going to work. I mean, I need a real account, and this is my stats. I need a real account, and I can't teach people. Like, I want to trade. I
Mm.
can't teach people while I'm trading. Post that, like pre-market, post-market, I can help people. But
Yeah.
and this is where the education side of me started to come in, because I trained a lot of people over there, and then they
Right.
were always curious to listen to me. So I figured out
Mm.
one thing, that I'm trying to simplify trading for them. So I'm helping them, and I'm trying to solve a problem there. And number two
Mm.
is, I was always like a very chill person. So
Right.
even if I was hitting my loss limit on the day, I was like, okay, let's have pizza. And other people were like,
Yeah.
oh my god, we have to go here, there, and
Mm.
this is this. So they were all wanting to learn this. And then I was like, when you lose 35 40 lakh rupees in like 4 5 years, when you
Correct.
had like a lot of failures in trading, you are automatically going to understand how things change for you as a trader, and how do you really learn from those mistakes. So
Right.
this is what I did. So I did not really work
Okay.
any corporate. I
Mm.
don't have any job experience, and then I joined havenspire. So again, that was
Yeah.
again like a product side experience, but not like an IB experience.
Right. So wonderful, wonderful journey. So first, after you did MBA, you went and worked with a few. You interned with a few so-called investment firms, and then you
Correct.
didn't like it. You went out, and then you joined a prop desk in Delhi. You went to the States, learned from few people, came back, and with that, you quit that, right? Ultimately.
Yep. Yep. I had quit that like within like the next week, because it was just not
Okay.
working out for me.
Right. So okay. So what made you get into trading? So there has to be like an inspiring thing, your friends or probably YouTube videos or whoever it is. So why did you start trading?
Okay, so there were two reasons why I wanted to do trading. Number one,
Hmm.
I found it a very cool profession. Okay, I'll be very honest.
Okay.
I found it a very cool
Hmm.
profession. You press a bunch of keys,
Hmm.
you plan for things. So I always loved two things, finance and strategy. This is what my master's is
Hmm.
on. So trading is
Correct.
nothing but finance and strategy, right? You strategize
Correct.
and then you execute, and that's the finance part of things. Like you manage money, you manage risk, and then at the end
Right.
of month, you're either green, you're either red, or you're just dancing
Yeah.
between break even or green or red. So I always loved the idea of that. So that was one reason, because I liked the idea of the profession, and I was always interested
Hmm.
in business and stock markets. And stock markets is what? It's just basically a market of all the businesses, right? So it
Correct.
always, like, the vibe always matched. And whatever I was
Hmm.
learning in these 4 5 years, I thought the best positioned thing for me to do is the stock markets, because that is
Hmm.
where my expertise is lying. That's one.
Right.
Second is, I think, my dad. So my dad is a doctor
Okay.
by profession, but he was going to Australia every year to learn something
Okay.
called GAN, right? So
Yeah.
it's basically GAN style of trading. And I was like, what are you
Hmm.
doing? I mean, what do you do every year, going 2 months to his
Hmm.
coach? And then by the time, like,
Okay.
I was in the school, so I didn't really know about it. That by the time I
Hmm.
went into my first year, I still remember a very funny conversation. So I was in my first year, and I gave my dad a call. Hey dad, RSI was above 80, but the stock is still falling. He laughed. He laughed. Okay. He was like, if you think it's like, if you think this is how trading is done, wash your face and come back. Okay. So I still remember this conversation. I was like 19 in my first
Yeah.
year, and then he laughed at me. And then I told him, I want to learn whatever you do. I'm smart enough. I want to learn what you do. He is like,
Yeah.
you have to, get into the water first. You have to dirty your hands.
Hmm.
Do that for 2 3 years, lose some money. I was like, how can you ask
Yeah.
your son to, like, lose money? It's like, stock market will only make you understand things when you get lessons from their own
Correct.
side, and that's
Correct.
money. Now, whether you lose $1,000,
True.
2,000, 5,000, that is completely dependent on how much money you were
Hmm.
having at that point of time. But any money that's going to hurt you, that's going to,
Correct.
get some pain for you, that's going to make you learn this. So for two and a
Learn.
half years, he never gave me any book. He never
Okay.
shared any resource with me. And he was like,
Hmm.
whatever I'm doing, this is completely different. You have to gain some experience. Basically, what
Right.
what happened is, they were working on a systematic trading system,
Hmm.
which was based out of GAN trading systems and
Hmm.
strategies, and it was completely systematic. Like, you did
Right.
not even have to look at the chart on a daily
Hmm.
basis. Like, you just had to do it on a closing basis. So I really liked the idea that how can you be so systematic, like, and so cool and calm. So it's like, this is how professional trading is done. So you'll learn it later. So
Correct.
that gave me, like, that spark. And my
Hmm.
dad's coach, who's Mr. Sinan Kore in Sydney,
Okay.
he
Hmm.
had four Porsche. I mean, he had a Porsche
Oh.
Cayman. He had like three or four supercars, right? And three of them were Porsche. And I was very fascinated about cars. It was like,
Hmm.
if this uncle does trading, and then he has like four cars, even I can do it. So
Yeah.
basically, my dad played like a role, and then he's like, it's a very rewarding profession, but then people lose
Hmm.
out a lot of money. So you have to be very
Correct.
careful. So then I was like,
Correct.
this is a very challenging thing to do, because a lot of people do it, but they
Hmm.
fail. So if you succeed, you are anyway like in the top 5%. And then
Yeah.
I was always, my parents were always doctors, and everyone around me were
Hmm.
professionals, either lawyers or doctors. So I had to set up my
Okay.
own business, because I wanted to do business. I did not want to study for like
Correct.
8 9 years. So I was like,
Yeah.
what is the cheapest business that I can start with, like, lowest investment?
Hmm.
Stock markets, where
Stock
only
market.
skill pays you dividends, right? Skills will pay you dividends,
Hmm.
skills will pay you returns, but you don't have to set up a factory. I don't
Correct.
have to hire hundreds of people. I just have to work on
Correct.
my brain, my psychology, and my skill.
Hmm.
That's what I do.
Correct. Superb, superb. And I think you're very lucky to have such progressive and supportive parents because, in the Indian family mindset or the society, if I mean, when I started trading, I used to tell them I trade, and people were like, "You lose a lot of money," and I was like, "No, it is systematic. I know how to do. There is something called risk management. I have to analyze. I have to learn." I was not able to kind of convey it to them. So whenever people say stock market, it's like people are going to lose money.
Correct.
So, and probably in that way, I think both of us are very lucky to have
Yeah,
progressive
surely.
parents like that. Yeah. Okay. So basically, you started trading because you liked the lifestyle that stock market provides, and you also saw your father trading, and you were kind of inspired by him and his coach. Correct?
Yes, I mean, when I say
Hmm.
lifestyle, it was more of freedom. So, see,
Hmm.
I knew that. So, I live in Jodhpur, right? So, this is a city of industrialists. This is a city where
Correct.
a lot of people have a lot of money, and people have made money from like scratch. So, I knew
Hmm.
business can give you a lot of money, or anything that you do very, very well, you can earn a lot of money. But
Hmm.
a lot of them did not have freedom of
Hmm.
going anywhere anytime, or being
Correct.
confined to like a very 9 to 5 time, a race against time, like just keep hogging here and there. So I always like the idea that stock market is something where you can do anything that you want. You have a
Correct.
very rewarding you
Hmm.
know if you do it well, you can get rewarded
Hmm.
in a insane way. And then I just did a banya math. Okay, I asked a
Hmm.
lot of my friends in my 11th and 12th grade, because I was always fascinated about business. I used to always ask them, how much returns does your business make on a monthly basis, on an annual
Hmm.
basis? So
Hmm.
there's a person who does a chemical manufacturing business. He says,
Okay.
if the markets are good, we do 14%.
Hmm.
If the markets are bad, we do like a 3%. And if the markets are average, which is like
Hmm.
6 years out of 10, we do a
Hmm.
8%. So one is a
Right.
hotel owner. He says we do 12%.
Hmm.
And every answer, the average was 11%. I was like,
Okay.
Nifty has been giving 17% annualized average return in the last 25 years. Why have you set up all of this business if you want to make 17% on your capital? So I was like,
Right.
if I can make more money than them in the
Hmm.
sense that I know that they
Yeah.
have a very big setup. But like in percentage terms, if I have
Correct.
to start something from scratch and they have businesses from 20, 25 years. So if I have to
Hmm.
reach their level, as an inspiration, like for example, if they are at 100 and I'm starting at 5, if I want to reduce that gap, that even I want to be at a place where I want to, relax, chill, all of that stuff.
Correct.
So the only thing is that you have to earn 18% when they're earning 11%. So
Hmm.
only then your compounding will be faster, and stock market
Correct.
provides that to you. So that's the
Right.
reason I thought stock market is a very smart career option to choose. Not because I have
Hmm.
chosen it. I'm just saying that slowly
Yeah.
people are going to realize this, that it
Hmm.
takes hard work. It's not easy. It
Correct.
takes hard work. It'll take courage, and it'll take
Hmm.
a lot of fighting from the society, because
Correct.
people still think that you guys are gamblers, you guys are going to lose
Hmm.
it all one day, because people have not seen the professional side of trading. And I think
Correct.
with whatever I'm doing currently, I'm trying
Correct.
to make people understand that there is something called professional trading education that is existent, and you can do
100%.
things in a very, very chill way, and
Correct.
progress by helping others.
Superb. Rightly said. Because a lot of people think that trading, when people tell that we are day traders or whatever it is, they think that trading is we do trading because of the money that we get or we lose over whatever it is. But I think, as you said, it is more of the freedom that we have, the more of the flexibility in life that we have, and the lifestyle that we can lead.
I would say, I would say, for me, it's money and time both, right? I
Hmm.
get to spend more time doing other stuff which I can, and I
Hmm.
earn more money. See, you can't
Yeah.
get money out of the picture. Okay, it's very simple,
Correct.
right?
True.
Whatever you're going to be doing, it's going to be for money, right? And humans have a
Hmm.
very, very sacred relationship with money. The more money they have, the more love they have for money, right? So
Correct.
saying that not for money but for freedom, I think would be a lie. I think money
Okay.
always played a very big role, but for me, freedom played an equivalent role.
Hmm.
Because so when it's about money, you want to make like a lot of money every day and fast. It was not the case with me. I wanted to grow at a faster rate. I wanted to multiply my money at a
Hmm.
faster rate, but did not mean that every day I want to earn like lots and lots of money. No, I
Right.
always looked at it from a very static and dynamic approach. That power of compounding will help you if you can compound your money
Hmm.
to more at 15% for more than 10 times a year. Your money
Yeah.
will be 1.8 times of what it was in January. And if you can double your money in every 11 or 12 months,
Mm.
you are beating 98% of all
Yep.
market participants and 98% of all businesses. And then when
Businesses.
you slowly increase your capital, these numbers are always going to get better. So,
Mm.
mm, you know, every person will spend 75% of their life working for money, which will not be even left with them when they die. So I
Mm.
did not want to spend 75% of my life in getting something which will not even be left with me when I leave this world. So I always
Right.
wanted to spend 25% of my time to make that 100% money, and stock market provides me that freedom. That is what I look forward to.
Superb. And it's really great that you were aware of what you wanted to do and you realized it very early in your life, right? And coming to that get rich scheme that people have about trading, right? So, what do you want to tell people who think trading is like a get rich scheme?
Okay, so the thing is, get out of the fantasy world. Trading is not a get rich
Mm.
quick scheme. See, trading can be a get rich quick scheme if you were lucky. And the
Mm.
stock market has a very, very ferocious habit of giving beginners like a luck whenever they start off, right?
Correct.
Everyone gets lucky, right? A lot of people started in 2021. Markets were just going up, so they got that hint
Mm.
of luck, and then people thought, hey, the stock market is my cup of tea. So what I want all your viewers to understand, if you want a get rich quick scheme, go to the casino, go to
Mm.
any other place that has much better odds. Stock market is a pure play business. Okay, so if you
Mm.
come here with an approach of a get rich quick scheme, the market is going to take your house away. Very
Mm.
bluntly put, the market will take your house away. If you don't know,
Correct.
you're trying to play with fire, and when you're trying to play
Mm.
with fire, you need to be well protected and well equipped, right? So
Correct.
the stock market always, and I always would, tell people to take it
Mm.
as a profession. Now, when I say that you
Mm.
take it as a profession, number one, you understand how does this profession work and how do you make money in this. Now, when you will understand that, you will understand that you are essentially doing nothing but managing risk, and you are trying to play with
Mm.
uncertainties. You're trying to play with uncertainties with the rotator or the regulator of risk in your hand. So at all times you are
Correct.
under control, right? It's not that things
Mm.
can go away from you. Yes, there are black swan events. Yes, there are some extraordinary events, but even those events cannot steal everything from you. They can only take like a certain proportion of that, right? And that is there with
Correct.
all businesses, right? COVID came, like
Mm.
everyone
Yeah,
lost their
of
job.
course.
So that level
Correct.
of risk every business will have.
Okay.
So
True,
now when
true.
you understand that, okay, this is a business of managing risk. So that's one.
Mm.
Number two, how you're going to make money? You're going to make money by understanding how money flows into stocks, right? So if the stocks are going to go
Mm.
up or if the stocks are going to go down, I need to understand something called technical analysis. Then
Mm.
if I want to understand something called technical analysis, uh, am I so stupid to really think that I can watch like 4 YouTube videos and think that I can make a lot of money in the market? So try to improvise that approach, that maybe there is something more to it. Try to read more
Mm.
books and try to understand that if you want to, if you have spent 5 years in engineering and expecting
Mm.
a literally 20% ROI on whatever amount you've put in your fees, and if you're spending 5 years for your law degree or 5 years for your MBBS or 5 years for whatever you do, at least spend 1.5 years in the stock market trying to only learn and trying to
Correct.
just figure out how this business essentially functions. So I would
Correct.
say that treat it as an entrepreneurship project. I call my traders
Mm.
entrepreneurs because you're starting a new business. You're going to have to put in money for your education. You're going to have to put money
Correct.
for maybe some tools. You're going to have to put in
Mm.
money maybe to get your psychology right. You have to probably put in money to maybe get a better device to trade on. All of these
Correct.
are investments, and these investments are going to
Mm.
give you returns over a period of time, provided you are skilled enough. So the problem with people
Mm.
is people want to make a lot of money quickly, and there is nothing wrong in that. The wrong thing is you don't know your risk appetite. If you want to make
Mm.
money quickly, do it with 1% of your liquid cash. Then you will say it's a waste
Mm.
of time. Maybe like 1 lakh rupees I have, 1,000 rupees ka, what
Ah,
I will do. So now then they're not interested. So the thing
correct.
is, I think there is a fundamental problem of number one, people not understanding how money really functions. That's one.
Mm.
Number two, they're very bad at personal finance. And
Mm.
why do you want to make a lot of money? Because you have debt that you can't afford to repay. because you have expenses that is out of your comfort level or out of your
Correct.
comfort zone, or you have to get things which are unachievable for you. So these are the only three reasons for greed, and that
Correct.
greed always is associated with the stock market. Are Baba, business, a lot of business people also take a risk. A lot of jobs, 9 to 5 working professionals also take risk. But stock market risk is always associated with money. That's one. Another
Correct.
thing is Indians, especially Indians, do not
Mm.
value time. So I would
Mm.
say if I'm risking 2 lakhs in the market, and if you're trying to risk 18 months of your life doing something which is wasting your time, you are taking a bigger risk than me, because this 2 lakh
Correct.
can come again. Your 18 months
Mm.
can never come again.
Never
So
come.
time spent can never be bought back. So, when
Mm.
people want to do things quickly and they want to, be very, very quick at it, it is because they have wasted time somewhere else. And they are trying to, play a
Compensate.
catch up. Yeah, they're trying to play a
Ah.
catch up with the stock market because they think that it is possible to make a lot of money. It's possible.
Correct.
It's possible to make a lot of money. Everything is possible. But you have to understand that if you want to stay here for a long time, if you want to make a
Mm.
consistent income out of this, you have to get yourself educated, trained, and behave like a mature trader and start
Correct.
respecting the capital that you have. And most like
Mm.
lastly, and the most important thing is get good at personal finance. You'll automatically become good traders. So that's what my message is to all of those people.
Superb, superb. I think my next question was, what is the right approach to start? So I think you've answered that as well.
Hmm.
And yeah, as you said, people I think have to treat trading or the stock market as a long-term game, as a long-term business. So because I've seen people, just like the example you gave, they would have invested a lakh or 1.5 lakh, and they would have got like 6%, 7% interest. But 7% of 1 lakh is just 7,000 rupees. So that 7,000 rupees seems very less to them. But they don't compare it with the bank FD. They don't do that. So if they think if they invest their money in the stock market, it has to double tomorrow. It has to double after 1 week. So I
Correct,
think that's
correct.
that's a problem.
I think one thing that people don't understand is that stock market is a place to create wealth, and wealth is
Hmm.
always created with time. Wealth is a two-dimensional thing. Wealth
Hmm.
is a product of time and appreciation of your asset, right? So time so you can't buy, and for that you'll
Correct.
have to wait. So everyone wants to create wealth, but they don't want to wait.
Hmm.
Now, when you do this, this is called income. There is a difference between income and wealth.
Hmm.
Stock
Well,
markets can give you income and wealth both, right? When
both.
you do a job, it's your income, but then you put that money into the stock markets to create wealth. Now, what
Correct.
people want to do is people want to get their money quickly, and they want to get the returns of the wealth part of things, which takes more
Hmm.
time. So
Correct.
you're getting it wrong here, right? If you want a
Correct.
consistent income, it'll always be in percentage terms and it'll always be proportionate to the capital that you're putting in, right? So when you are trying
Correct.
to go for a job which is paying you, let's say, 60,000 rupees a month, you
Hmm.
have put in 5 years, which is 60 months. 60 months, and if I calculate all that expenses, including tuition fees and all of that you have done,
Hmm.
you are not getting more than 3% or 4%
Correct.
of what money and time you have put in 60 months, right? So the stock market's
Correct.
even giving you 7% a month with active trading is way, way better than any other thing if you look at it. Because we just don't look at it from that perspective. Arey, parents paid
Correct.
na, college fees to parents paid. So it is
Hmm.
not our cost. We are to getting 70,000
Correct.
rupees. But you are not looking at the time element and the sunk
Hmm.
cost.
Correct.
This is called the sunk cost fallacy, which a lot of students go around it. So when you start looking at things from a time dimension and then from a percentage dimension, I think you'll try to understand that what trading is really all about.
Beautiful example, Paran. That was a really great example. Okay, coming to my next question, it's about how important mentors are in trading. So, what is your comment on that?
I think mentors are required like in every domain, not only in
Hmm.
trading, but I think trading needs you to have a mentor. Now, I
Hmm.
wasted first 4.5 years of my trading just because I did not have a right person to guide me all the time. I
Right.
have taken more than 40 courses, not only from India, from America, from Australia, from London, like anywhere and everywhere possible. But I never got a mentor who will tell me that, okay, this is what you're doing right, this is what you're doing wrong, this is what should have been done. So that's one. Number two, stock market is a very dynamic, place to be in. Things change every day, and then
Correct.
you're always you're always going to get rewarded as a as you. It's always a function of the decisions that you take. Now your mentor has two roles to play. Number one, he or she is going to tell you what mistakes that he or she has made, which you will not make.
Correct.
So that reduces your learning curve. Now, as I told you,
Correct.
I value time a lot. Now, if I want to waste 5 years of my life in learning what I can learn in 2 months, I will prefer to learn it from 2 months, and I would like to learn it from a person who's made this mistake for 4 years. So I get
Correct.
that wisdom. So try to understand. A mentor is not a person who's going to trade from your account. A mentor is not a person who's
Correct.
going to make you rich. That you will do. But the mentor can tell you the right thing to do, the right habits to have, how that mentor is doing that particular thing himself or herself. So you learn by doing with them, and then
Then
you
correct.
start. I think the major role of a mentor is to give confidence to his or her mentees, that
Correct.
okay, I've been doing this, I've made these mistakes, I was here, now I'm here. You can be at the same place but at a much faster rate, right? So if I look at
That's
my
important.
mentees, if I look at my mentees in 3 months of them being trained, they're much smarter than what I was after 4 years of training and losing a lot of money. So I think
Correct.
mentors solve two big issues for people. Number one is time. It reduces your learning curve by leaps and bounds. And the other thing is that constant feedback and that constant appreciation, or maybe like in some cases, you would always want to get like abuse or a hurl or two from your mentor for not doing the right thing. And
Correct.
when you have other people who are getting mentored by the same person, and then you start seeing them grow, you always start to get confident that even you can do it yourself. And then when
Correct.
everything kind of sets up perfectly, where you are doing well on your own, and you have a mentor by your side, so anytime if anything good is happening, even then you need like a positive feedback from your mentor, because
Correct.
that gives you confidence that okay, you're going in
Do
the right direction. If you are doing bad, or if something bad happens, then your mentor is there to keep you back on track. And all of this process can take a lot of time. So
correct.
it's not that your mentor is going to teach you like how to create gold. Okay, your mentor is not going to teach you how to manufacture gold. Your mentor is going to just tell you the right things at the right time, the right skill set, and everything that will help you optimize in that particular specialization, right? So it's like
Correct.
a power packed course or an experience
Mm.
which gives you like intensive training in that one specialty direction, or whichever field you want to go in. So I think it's
Correct.
extremely crucial. It's extremely crucial.
Super. Rightly answered. Okay, so now let's say there's a guy or a girl who wants to start trading. Okay, and given the right set of mentors, given the right set of skills. Okay, the ultimate question is how much money should I start with? A lot of people ask that. So, what is your take on that? What should be the minimum capital to start, given the right set of skills and mentorship?
I think I use a framework for this. So this is what I learned in New York. So
Okay.
number one is, if you are very new to trading, start with like a very small amount just to test the waters. Now this amount is not going to make you money. 5,000 or 10,000 rupees to start off is not going to make you money. This is just for you to try and test out how things really work. Right. So that's one. So this 5-10,000 rupees, don't think it as your capital. This is like your practice money, which you are putting into the market just to test the waters. Now, the reason I'm telling you it's practice money is because try to understand. If you want to go to the gym, you need a certain amount of energy inside you to, work out. Now, you can't
Correct.
go with like 5% energy left in your body and then go to the gym, right? So you can't come into the market with like a very low capital and then expect the market to make you a lot of money. So this is where a lot of people go wrong. 10,000 ko 20,000
Correct.
करने वाली scheme नहीं है ये, sorry. Okay, this is not that thing. Okay, so you either, number one is you start with a 5-10K account, and then you start focusing on the percentages that you are making by applying the strategies, concepts that your mentor or whatever course you've taken or wherever you have learned it from, when you apply it systematically, how much returns in percentage terms is it giving to you. You get a reality check over there with a very low cost. So your entry barrier is very, very low. So what happens is whenever a new company wants to launch a new product, they are always going to do a trial run, right? So if you go to any Starbucks, the next signature beverage, they're going to give you in like these small, small cups. These are your trials. Please test it out, right? So you're trying to do that. You're trying to do that right now. You're trying to just get into the market, trying to punch orders, get a feel of the market, and I would like to say, get the pulse of the market, right? How things are going. Am I able to make a 3%, 4%, 5%, all of that stuff?
Right.
That's one side of the things when you're starting up initially.
Okay.
If you have already passed this phase, you've already done that. 30% of your monthly salary should be your capital. You don't have to put it every month. 30%, for example, if I earn 1 lakh a month, I should not be trading with more than 30,000 rupees in my trading account. With that 30,000 rupees, I'm going to risk 2% each day. So either I make 4% or I lose 2%. Either I make 4% or I lose 2%. Either I make 4% or I lose 2%, depending on what day it is, whether it's a good day for you, whether it's an average day or a bad day. Now, when you're having a 30K account and you're losing 2% of that, let's say it's a bad day, you lose 600 rupees. 600 rupees is 0.6% of your monthly income, which will not hurt you a bit.
Correct.
Right? And even if you make 4%, let's say, for example, if you are trying to lose out on, let's say, one trade, you're going to make some 1,200, 1,400 rupees. That's going to be 1% of your monthly income. So again, that's not going to make you hyper or fully excited, or you're just going to start thinking that let me leave the job. It'll start giving you some passive income. Let's say it only gives you like 6,000 rupees every month. Now that 6,000 rupees is basically eliminating your petrol, diesel, or gas costs. Let's say it's just trying to cut it off. And then when you go look at your personal finances, and for this step, you have to look at your personal finances.
Correct.
When you do that, you realize that this is scalable and I can scale it. Slowly and slowly, you put more money as you gain confidence. And then when your corpus becomes big, see, paise se paisa banta hai. Money will make money. Don't expect 10,000 rupees to make 10,000 for you. 10,000 rupees will only make 100 rupees for you. 1 lakh rupees will make 10,000 for you. 10 lakh will make 1 lakh for you, and 1 crore will make 10 lakh for you. So when you work with that approach, you have to understand that slowly and slowly, I can, number one, increase or rack up my savings. Number one. Number two, as and when I make money each month, I am compounding my money at a much faster rate. So if I keep doing it for the next 48 months, my capital will be 8 or 9x of what it is today. So again, as I tell you, compounding chart starts like this, and then it immediately takes a leap, right? So for the first maybe 24, 36, 48 months, you will be making money, but your capital size will not increase substantially. But then it'll start shooting up very, very quickly, and that becomes your turning point. So I think starting capital should be followed with a rule of 30% of monthly income, either that, or if you're very new, 10,000 rupees or 5,000 rupees as your starting capital. Or number three, never take a debt, never take a loan, never ask for money from friends or family or anyone to trade. Make your own money, do freelancing, do whatever. You go sell insurance, you go sell any bloody thing in this entire whole wide world. Beg, borrow, steal, do whatever. Do not take money from others and trade. Do not do that.
Right.
So that's the money that you should start with.
So basically, you start small, test the waters, and know how it's going for you. And that capital has to be 30% of your monthly income. Basically, that's the whole idea.
The world is so advanced. I mean, if you have skill, you'll get funded, right? There are so many companies giving funding to traders, right? So Byju's did not have hundreds and thousands of crores to fool people by selling their courses. Okay, they got money now when they had the skill to sell their course. So it's very simple. When you are a startup, you get bigger and bigger in your skill. You start solving a good problem. So, for example, Byju solved the education problem initially. Credit solved the credit card payment problem. So when they're solving a problem, they are not, they're not cash rich. They eventually become, because they're solving a bigger problem. So you as a trader, if you have that skill, you can get money anytime, anywhere. But if you lose a lot of money and you lose credibility and you take money from someone and then you lose it once, you're going to lose 5,000 rupees today. You're going to lose the chance to manage 5 crore rupees of that particular person, or maybe, take up 5 lakh rupees, 50 lakh rupees from any other person later on when you're ready for that skill. See, try to understand.
Correct.
Every business works on a loan. 80-90% of businesses will always work on a loan and they're easily
Correct.
repayable. Okay. So taking credit or taking debt is not bad. But in trading, you are trying to take that debt to repay another debt of yours. That is the
Is a
problem,
problem.
right?
Correct.
So you can't take a loan from a bank by saying that I'm doing it for my business, but then start
Correct.
repaying your personal loan from that. You can't do that, right? So people, again, there are there's like a very thin margin of error, right? When you're dealing with credit, when you're dealing with the debt, when you're dealing with markets money. So I would always recommend get upskilled first, get confident on yourself, then you can do all of this. Then this is the
Correct.
slight small risk that you can take, that I can take money from someone. I am sure that I'm not going to make it. For example, if I take 10 lakh rupees, I am very, very sure on myself that this will not go beyond 9 lakhs. Like maximum 1 lakh loss I can have, and that I can
Correct.
bear. That
Bear.
is a risk that you should take based on your skills. But
Correct.
this risk should not be taken if you don't have skills.
Superb. Actually, I was going through an article. A newbie trader, he kind of borrowed 1 crore rupee from his family and friends. I probably would have seen it in the group,
Yes,
right?
yes.
And he is now selling his house. So never
Never ever.
take credit in trading if you are not skilled.
See, I'll tell you one thing. I'll tell you one reason for that. A lot of viewers might be saying, "Arey yaar, ye to we listen everywhere. Ki mat lo." I'll tell you a scientific reason for that. Your brain has dopamine, okay, which is a chemical which gets secreted when you smoke cigarettes, when you drink alcohol,
Correct.
and when you earn money, and when you have sex. These are the four sins, right? Where your dopamine will
Yeah.
get secreted. This is a fact. Now,
Correct.
when you are used to seeing 10,000 rupees or 1 lakh rupees into your account, your mental block is that this is good money. When you start seeing 10 lakh rupees, your dopamine goes out of control. Now, this is
Correct.
where you basically what happens is, why is drinking and driving not allowed? Because your concentration and your brain cells are off. You will
Off.
keep pressing the accelerator and you will not even realize what the speed is. Same way in trading, this is nasha. Extra
Correct.
money which you don't have, taking it from others, it's nothing like it's like a drug. So when you have too much of that money, you feel I can make more money. And when that happens, you lose track of your entire risk management and your entire systems. And now the
Correct.
market will decide your fate and not you. So this
Correct.
is why you should not take other people's money, because number one, you are going to be much more you are going to be much aggressive in taking risk with other people's money for two reasons. Number one, tumhara to hai nahi. Number two, you have taken this to fulfill a purpose. You are not taking money to help them. Try to understand. When you borrow money from someone, no, you are trying to help yourself. You're not trying to help them.
Correct.
Number one. Number two, when you're trying to do that, your entire mental balance or your entire psychology has to be stable to respect that money as a trader. I'm not saying respect that money because you've bought it from somewhere or you've got it from somewhere. You have to respect that money as a trader, right? So that maturity only comes with experience, with time, and with trading skills. So jab tak
Correct.
wo nahi hai, then you even if you take like whatever amount of money from whoever, you're going to lose it all. So do not take it.
Correct. Superb. And also, generally, when we discuss with our parents or our friends or family, whenever we mention stock market or investment, they'll be like, "I don't understand it. It's not for me. Investment is not my thing." So, do you think that there are like a few terms or finance jargons that people have to know, and it's important for them to know? Probably it might be like inflation or something like that. Do you think?
I think people are financially illiterate, and I'm not saying that it's a good or a bad thing. It's definitely not a good thing. But when I say financially illiterate, I don't mean to demean anyone. But what I mean to say is that if you can just be slightly smarter about money, you can basically be helping your money work very smartly for you, right? So a problem is a lot of people will make a lot of money. They are not financially weak, but they don't know how can money work for them. How,
Mm.
what is the good rate of return that they should expect. And there are like a few things that if they start understanding, no asset manager, no mutual fund, or no
Mm.
insurance agent can fool them. So I think being
Right.
aware about personal finance is very important. And when you are
Mm.
aware about your personal finance, you automatically get to know these jargons. Now, for example, you
Right.
open your credit app, you open a
Mm.
expense tracker app. They will always tell you,
Mm.
because see, they want to sell a product. See, try to understand. They
Yeah.
want to sell a product, so they will tell you inflation is 5%, so your money is getting
Mm.
reduced by this much. So yeah, app खोल के ही पता चल गया ना. You got to know that okay, there
Mm.
is something called inflation, which is 5%, so my money
Correct.
will become 95. So yeah, this level of financial awareness should be there, right? Now,
Mm.
if you're
Right.
thinking that your bank, you're just gonna check your bank balance and then you're gonna be smart at saving, don't do that. Set up SIPs,
Yeah.
set up smart,
Mm.
set up smart ways in which as soon as your salary gets credited into your account, you put that money to safety, right? You put that money into your safe house, which is your SIPs, or how do you insure yourself? Because medical insurance, health insurance is again one of the most underrated things.
Correct.
Gen Z doesn't really care about them. Mutual funds, though, abhi, so many advertisements have been there that people now still
Yeah.
consider mutual funds as like a thing to do. But otherwise, they
Correct.
don't know what small cases are. They don't know, if someone is saying 15%, 14%, we will give, that the Nifty also gives. So they need to understand. Now, see, a lot of people get fooled by this. Someone says, I'll give you
Yeah.
annually 14%. That so everyone gets na. Mutual funds will get this. So some people
Correct.
might sell a mutual fund with a high exit load or a high
Mm.
management fee, where they're getting more commission. So you need to be
Correct.
slightly smarter now. So even if you like follow like good YouTube channels, or maybe good
Mm.
Instagram content, I think
Mm.
short form content is what's going to educate everyone. I feel so. I
Yeah.
think that's going to be the next
Correct.
thing to educate people.
Yeah.
Because I was just reading this out, like interesting stuff, that TikTok is
Mm.
slowly and slowly becoming like a search engine. Because earlier we used to Google
Mm.
how to make a pizza and we used to get like these blog articles, right? And we were
Correct.
okay to read a lot of stuff. Right now, we want a short video of 30
Short
seconds
video.
to answer that problem. So I think
Correct.
those short form videos, and I think there are so many good finance creators on Instagram.
Mm.
I think if you start following them, or maybe
Right.
something on TikTok, or maybe something fun, I think slowly and
Mm.
slowly your financial quotient (FQ) is going to be much better. And when
Mm.
it gets much better, you can inculcate these good habits in your next generations to come. So I
Right.
think it's very, very important to not know jargons. Don't know jargons. Do
Mm.
not care about it, but at least
Mm.
know about your own money, and make your
Mm.
goals, and then figure out how you're going to reach that 4, 5, 6, 10 crore, 20 crore corpus mark after 20 years from now. And
Right.
also
Okay.
see that something which is costing you 2 lakh rupees, for example, a dental treatment today might cost you a lakh, let's say. After 20
Mm.
years, it's going to cost you 50 lakhs.
Correct.
After 50 years, if your dental treatment cost will increase, but if your money has not increased in the last 20 years, you will not be able to afford the dental
Exactly.
treatment that you did today. So people are not understanding this. So
Correct.
salary theek hai, but you have to understand how do you have to multiply your money. That's
Correct.
important.
Superb. So start small, start early, and plan your investments,
Correct.
basically, right? Okay,
Yes,
superb.
absolutely right.
Okay. Last question to you is, can you give a few tips to newbie traders? What would those few tips be?
Okay, number one, be an
Mm.
expert in risk management. So one of the most
Mm.
underrated things that traders don't like to do, and if you want to be in the top 5% traders, start focusing on risk management from day one, and keep doing that until you until you become the best risk manager. So I would say, do not focus on strategy first, try to focus on risk management first. That's one.
Mm.
Number two, inculcate good habits and find a mentor as soon as possible. That will speeden up your learning curve, and that will lessen the time taken to do everything. And also a community of like-minded people, I think
Mm.
that'll boost your morale really quickly. And then when everyone's going slow, you're okay to go slow. But when everyone's going fast, and you are slow, then you feel like I am the odd one out. So when you're into like
Correct.
when you find like-minded people, are doing the same thing and who are at the same level as you are, I think there is more connections built over there, and I think that helps you. So that's advice number 2. And advice number
Hmm.
3 is, do not go after trading very simple things,
Hmm.
or taking someone else's strategy and trying to trade. Do not find that one strategy that will change your life. It is not. And stop trying to see the same thing, or try to practice the same style of trading which everyone else in on this planet Earth is trying to do. Try to be smart about your decisions when you want to get started into trading, and take complete knowledge about it, and then enter, and then burn your hands, right? So I
Right.
think these are the 3 pieces of advice. So if I summarize it, it's going to be: risk management, number 1 priority;
Hmm.
education and mentor, number 2 priority; and number 3 is that extensive knowledge, not only about trading in general, but about the overall financial markets. I
Hmm.
think that is going to make you a better trader in the long run, right? So stop running after strategies. You will learn strategies eventually. If you stay in the game for like long enough, you'll create your own strategies. You'll gain that much experience that you create your own strategy, and then you'll
Correct.
be able to profitably trade that. So don't run after strategies, or telegram tips. ये तो मत ही करना.
Hmm.
And short call, jackpot.
Yeah.
Stay away from all of this crap. Nothing like this exists. So I think everyone is smart enough to make money
Hmm.
on their own from trading. All you need is right
Yeah.
guidance, right education, and right training. You don't need see, a Telegram Chintu is not going to make 5 crores for you. Think, okay, you're going to do it yourself, right? So
Correct.
if you eventually want to do it yourself, then start working on your own skills, and then
Hmm.
you know. So I think these tips: education
Yeah.
and risk management, very important.
Super.
Later on, you'll automatically become a good trader.
Super. That's great. And also, lastly, Parang, do you want to tell our audience about your mentorship program?
Okay, so I have basically been a mentor since the last 3 years, and I have a mentorship program where I train traders from nothing, and I want to make them super traders, right?
Hmm.
So this is a cohort that I do. Sarang is a part of it, and
Yep.
we have a lot of fun. So you basically get to learn from everything from the very scratch. And the way I would try to put it in front of you is that uh, this program is going to help you in 3 ways. Number 1 is it's going to make you understand how the big money functions in the market, and
Hmm.
how the smartest traders are thinking. Number 2, you're going to learn a lot from me, from my trade executions and my trade ideas, right? So that's the learning that's going to be like 7 years of wisdom, 7 years of experience that comes. And when that idea is applicable, live in the market, that is something that you don't want to miss out on, right? From any trader, not only from me. And the third thing is, you'll get a community of like fantastic traders
Exactly.
who are gonna just be a family to you. So I think you should definitely check out my Instagram if you are interested in trading or getting mentored.
Hmm.
And I'll be very, very happy to help you. Even otherwise, just drop me a message on Instagram or Twitter. Connect with me if you need any help. I'm always there.
Superb. I actually love a lot of things from your mentorship program. Okay, so to name a few, your patience. Because I have never seen a mentor who is so patient to deliver the knowledge. Because guys, we stay up till like what 1:30. Yesterday Sunday was
Hmm.
like we had the session till 1:30, and I mean the first thing I learned from you is to teach with patience. Because when even I do workshops, I conduct workshops and on a lot of other things, and the first thing I look up to you as a mentor is your patience. And then, of course, the community. I mean, the community is such an amazing thing, right?
Hmm.
That the people just keep supporting you no matter what. And, like even in the markets, we keep, like connecting with each other and sharing charts and all those things, right?
Hmm.
And
Hmm.
the other thing is the smart money concepts which you've taught, because I used to trade like a retailer. I used to trade indicators, RSI, MACD, and then triangle patterns. So usually, I never knew that something like institutional trading existed. So
Yeah.
after I started your program, that's when I understood, okay, whatever I was doing was bullshit, and I have to change my perspective on trading. Okay, so that's one thing, and definitely to the audience, I'm not saying this just because he's there and you know I'm doing a podcast with him. I have genuinely become a better trader after I started my program with Parang. And Parang, thank you so much for your guidance. And one more thing is, whenever I text him, he replies back. It might not be instant, but he makes us it a point to reply back. And you don't find mentors who are in constant touch with you. And we are like family. We share memes and we do a lot of other things, right? So if you guys want to start trading, or if you're already a trader and want to improve yourself, Parang's Pro Mentorship is the thing for you. Yes. Anything else that you want to talk to our audience about, Parang?
I would just say don't give up on trading. I mean, irrespective of wherever you learn from, whatever you do, how much longer your journey is, and whatever market you're trading in, whatever age you are at currently, whatever stage of life you're at currently, always remember two things. Money will always come back. Time will not.
Hmm.
And number two, never take anyone else's money to fund your dreams, right? You're going to learn it,
Hmm.
you're going to earn it yourself. And the third thing is going to be like it all starts from your own personal savings. So start getting better at savings, start realizing the value of money. And, this saving money habit is ultimately going to act like a drug for you. The more money you save, the more money you see in your account, and the more you want it. And when it keeps happening over and over again, you keep saving more. And when you do that, you start becoming a good risk manager automatically. So I think
Correct.
this is like my last piece of advice, and I wish everyone all the very best in whatever they are doing.
Super. Thank you so much, Parang, for joining me in this podcast. So until then, folks, this is your host Sarang signing off, and we'll meet next week with another guest. Chalo, bye bye. Bye, Parang. Thank you so much.
Thank you. Thank you. Bye bye.
Bye.